Thank you for joining us in another episode of the Dealmaker Series. Today, I'm joined by Claudia Reed. She's Senior Vice President of Corporate Banking at Hancock Whitney. Claudia, thank you for joining us today. Tell us a little bit about yourself and tell us about the bank.
Well, good morning, James. Thank you for inviting me on your podcast. So I am a 20 plus year banker in the DFW area, always focused on what's commercial banking and middle market banking. And I recently joined Hancock Whitney Bank. Hancock Whitney is a 126-year-old bank based out of Gulfport, Mississippi. We are a mid-sized bank with about $36 billion in assets. Our footprint ranges from Texas all the way to Florida, with a couple of satellite offices and a couple of other southern states that are not on that Gulf Coast corridor. Our group really focuses on what we call middle market size businesses. So probably 35 or 40 million plus in revenue. We work a lot with family-owned businesses or founder-owned businesses, and we also work with private equity-owned businesses, so those portfolio companies under their umbrella, and then also family offices as well, providing them with acquisition financing, working capital lines of credit, equipment lines, owner-occupied real estate purchases, investment real estate purchases, basically all the investment needs that a company might desire in order to grow their business.
Sounds like it. I did not know that Hancock was that large, so that's good to know. Wow, 36
Yes,
billion.
we're
Yeah,
a nice best kept secret, but we are definitely trying to expand our
yeah,
client base and make our name known.
absolutely. Excellent. Well, let's get right to it. So let's we're in Q2 right now, and so what are you seeing as far as deal flow? What's that look like? Is that increasing in velocity, or is it coming down, or is it maybe flat?
Well, we're still at the beginning of second quarter of 26. I will say if you were to compare first quarter of 26 to first quarter of 25, there's definitely been an increase. I believe that now, companies have been able to kind of figure out, the impact of tariffs on their businesses.
Yep.
So towards the last quarter of 25, people started picking up and wanting to go ahead and continue with deals maybe that they had put on the back burner. And then also people realizing that interest rates are probably going to remain steady. They're maybe thinking, okay, well, interest rates might not get any lower anytime soon, so I might as well go ahead and move forward with doing the transaction. Our outlook for the rest of this year is very hopeful. There are some geopolitical instances that are occurring at this time that could impact a business owner's decision to move forward with a transaction, but we're optimistic that deal flow will continue to increase.
Yeah, it's always good to hear that the quarter currently versus the prior year is moving upward. So that's good, especially since things have been a little strange in the last couple of years or so and not turning out the way a lot of folks are expecting. And to your point, this year has been turbulent, I think, in the first quarter alone. So hopefully that'll that part of the situation will calm down as we go through the rest of the year. What about deal structures? What are you seeing most frequently now?
Well, I guess it really depends on the type of deal. On our transactions where maybe private equity is acquiring a business, a lot of times what we're seeing is some form of equity injection, usually some form of liquidity injection, and then senior debt components along with maybe some existing owner equity rollover, and then maybe a seller note. What we're seeing on the senior long-term debt requests, like for real estate and maybe even equipment, are clients asking for longer-term amortization. And really the reasoning behind that is they're trying to preserve as much cash flow as possible. And so we are able to get creative and accommodate those requests either by extending the amortization or offering some kind of tiered structure amortization to help them with cash flow.
Interesting. I'm glad you mentioned the real estate side. I'm curious, is there a lot of activity in the real estate side here in DFW or as in Texas as a whole that you're seeing?
Absolutely. We're seeing a lot of not only owner occupied real estate, but investment real estate on the industrial space and also mission critical space. So like data centers as well.
Yep. Yep, for sure. So that's a easy segue into my next question. Let's talk about industries and sectors. Which industries are you seeing as most active right now?
Definitely, like I mentioned, the data center, mission critical. We're not necessarily lending directly to those companies, which we will, but we're seeing a lot of those companies that are complementary to data center and mission critical businesses. So that could be housing, that could be, the supplies that are offered to those companies. So it could be everything from pipe fabrication.
Mhm.
We're seeing racking, so whether racking distribution or even racking manufacturing. We're also seeing an uptick in industrial services. So those companies like HVAC, electricians, those companies that cannot be replaced by AI, basically,
Yep.
um, are what we're seeing a lot of activity in, especially with private equity. They've been over the last couple of years have been consolidating those companies. And we've also seen an uptick in wholesale distribution. And I think really from the wholesale distribution side, because those companies are equipment light, private equity seems to be really interested in those companies.
Very interesting. I'm curious. I want to go back a little bit. You did mention tariffs, and then you've got some insight around commercial real estate. Have you noticed any impacts from the tariff side in the real estate business? Maybe
No, not
impact.
I haven't really noticed it on the real estate business. I would say more, I've seen the impact more with manufacturers, especially those companies that maybe outsource their manufacturing to China. So I have a client of mine that I would say probably about 80 to 90% of their manufacturing was done in China. And as a result of the tariffs, they actually diversified production and moved it to Vietnam and India. So now they're only producing about 50% in China, which, I think that although that is hard on a company to have to pivot and switch up, who's manufacturing their product, I think from a risk standpoint that it's beneficial for the client to diversify production.
Yeah, agreed for sure. What other economic forces are you seeing impacting deals?
So, like I said, definitely, the tariffs. I think that, last year there was kind of a yo yo effect going on with, yes, there's tariffs, no, there's tariffs. And I think now companies are feeling a little bit more comfortable on what the outlook is for tariffs. The other thing is interest rates. The Fed has indicated that there's a chance that they're probably going to stay put for a little while before reducing interest rates. And I'm sure that pause is, going to cause maybe companies to maybe say, well, what are the chances of them reducing interest rates? Should we just go ahead and move forward with the transaction that we were wanting to do? And then also, like we mentioned earlier in our conversation, is the geopolitical events that are occurring at this time. It's impacting oil prices, which can impact utilities, impact transportation, which can ultimately, maybe impact some of the supplies for these companies.
Yep, very true. Okay, and so we're right at the beginning of Q2, like you mentioned, so we've got a lot of runway left, I would say. What do you see coming next for the M&A community?
Definitely see on the technology side. So anything regarding AI, again, data centers. I see there's an industrial services, see that continuing to grow. I also see commercial real estate continuing to increase. I think that old school bankers would say that real estate is king. And I think that during, sometimes slower periods, people start investing in real estate.
Yep,
But with banks at this time, I know, banks like Hancock Whitney, especially, we have a lot of capital to deploy. And so we are actively looking for strong businesses that need some form of senior debt to grow their business.
absolutely, absolutely. I like it, and I expect AI will continue to disrupt everybody's business as well, for sure. It's exciting to see where that's gonna lead us. Claudia, I thank you for your time, your insights. Those of you watching, you can find more insights from the Dealmaker series on the YouTube channel, or you can follow me on LinkedIn. Claudia Reed, thank you so much.
Thank you so much, James. Have a great day.